Morning, students. Welcome you all once again in the third lecture on Ind AS 116 leases. In the last two lectures, we have discussed so many fundamental concepts and the lessee accounting, right? And quickly in the next 5 minutes, I'll revise that accounting. Ashok ji, am I audible properly? Please confirm on the chat box. Okay. Student, we have discussed that in accounting standard AS 19 is the standard which talks about leases. In Ind AS, it is Ind AS 116 and it is IFRS 16 in IFRS. And why there was a change in the standard in terms of IFRS? So and Ind AS, we have discussed the background. Okay. Then we have discussed that what has been changed in this standard significantly and how this lease accounting has completely been changed in this particular standard, right? Friends, we discussed about the scope of this standard, that this standard is applicable to all kind of leases except few cases, right? Then we have discussed the meaning of a lease, and the lease meaning is a contract where there is a transfer of right to control the use of an identified asset for a specific period of time in exchange for a consideration, right? And we discussed about the right to control the use of asset and identified asset concept, right? And what is the identified asset? Identified asset is that asset which is explicitly or implicitly mentioned in the contract, right? We will say that an asset is considered as an identified asset if the lessor or a supplier does not have substantive right of substitution, right? And we have understood the meaning of substantive right of substitution. You can refer lecture number 1 to understand this in detail, okay? Then we have done so many case studies and examples to understand this concept. And we have also discussed the meaning of right to control the use of an asset. And for understanding the right to control the use of an asset, there are two legs of it. There are two parameters of it. One, you need to check that the right to obtain substantially all the economic benefit from the use of the asset should be lie to the lessee, right? Second, right to direct the use of identified asset has to be available to the lessee. Right to direct the use means how to use the asset and for what purpose the asset is going to be used. These two conditions, these two things has to be there with the lessee, right? If lessor has some protective right, then it is okay. Then there is no any problem. Again, we have discussed this concept in detail in the lecture number 1. Then we have discussed inception date of lease, and inception date is the first date when the lessor and lessee has entered into an agreement or the principal terms and condition of the lease has been decided. This is a date when the parties will consider whether it is a lease or it is not a lease. Sir, what does it mean whether it is a lease or not? For example, it is not an identified asset. Then this transaction will not be a lease transaction. This transaction will be covered under a different standard or under different rules of accounting, okay? And from the lessor perspective, the lessor will decide whether it is an operating lease or a finance lease, like we did in AS 19. Then we discuss the commencement date of the lease. Commencement date of lease is a concept where the accounting has to be started, right? On the inception only, the terms and condition has been finalized. Only it is decided whether it is a lease to be covered in 116 or what should be the classification of lease in the lessor books, okay? But on commencement date of the lease, the underlying asset has to be made available to the lessee. The lessee started using the asset, okay? So if the lessee is having a possession of that asset, you can say that the lessee is using the asset. And on this date, commencement date, you will determine the lease term, that what is my lease term, because the accounting will the accounting will be finalized on the basis of lease term, right? Because you have understood so far that whenever you finalize what is your lease payments, then you have to decide lease term, right? And then over the lease term, you have to do the discounting. You have to take the present value of the lease payments, okay? And this is the date when the initial recognition of the lease will happen. Right of use asset and leasehold liability will be calculated. Then we discussed what is meant by lease term, and in this case, we have that lease term is a NCP plus RFP plus ORP plus OTP, non-cancelable period plus rent-free period plus optional renewal period if the lessee is reasonably certain to exercise the option, plus optional termination period if the lessee is reasonably certain that he will not exercise the termination option, right? And again, we have discussed this thing in detail in lecture number 2. Okay, you can refer the lecture number 2 for to understand, to revise, to again understand this thing in detail. And friends, in this case, we have discussed in case of a termination clause, if the termination rights are available to both the parties, then the termination option should not be considered while calculating the lease term. If the termination option is only available to the lessee, then you need to consider whether lessee is reasonably certain or reasonably not certain to exercise the option. If the lessee is reasonably certain not to exercise the termination option, in that case, you have to consider, you have to add that period as a lease term. If only lessor has a right to terminate, in that case, from the lessee perspective, you have to consider the full period, right? Then we discussed and in what cases the lease term is required to be reassessed. And we have discussed that initially, for example, lessee was not certain that he will exercise the option, but now he is certain that he will exercise the renewal option. Or earlier he was certain, he was not certain, or he was certain that he will not exercise the termination option, but now he becomes certain that he will exercise the termination option. So if these things happen, then of course there is a change in non-cancelable lease period. And this is how the reassessment of lease term is required. Again, we discuss this concept with the help of 2-3 case studies. Then we discuss what is meant by future lease payment, and we discussed in that fixed payments plus in substance fixed payments plus variable lease payments depending on an index or a rate plus exercise price of a purchase option plus penalties for terminating the lease plus residual value guarantees by the lessee. These are the five elements which needs to be considered for the purpose of lease payments from the perspective of lessee. From the perspective of lessor, in addition to these 5 elements, the residual value should be guaranteed by the lessor to the lessor by a third party, whether it is an independent party or whether that party is related to the lessee. So that will also needs to be considered from the lessor perspective, right? Because while calculating from lessee perspective, you are only considering the guarantee which is given by the lessee, because it is the lessee who is doing the accounting. So he is only concerned with himself. But when you are talking about lessor is concerned about what money he is getting from letting out that asset, right? So it does not matter whether that residual value guarantee is given by the lessee or given by the party related to the lessee. For example, a subsidiary company is using the asset, okay? And the holding company on behalf of the subsidiary has given a residual value guarantee to the lessor. So how does it matter to the lessor? Lessor got the guarantee, right? Lessor knows that this much amount of money I'll get. That's all. But from the lessee perspective, only lessee is concerned about his payments, what he is going to make. Lessor is concerned about the payments which he is getting, right? And that is why in case of a lessor, one extra element is there, that is residual value guaranteed to the lessor by lessee, by any party related to the lessee, or by any third party. Doesn't matter, right? Again, we discussed some case study. Then we talked about the interest rate implicit in the lease. And friend, interest rate implicit in the lease is an interest rate on the basis of which you will calculate the present value for lease accounting. And who will calculate on the present value basis? The lessee. And this interest rate implicit in the lease has to be checked from the lessor perspective. But in many times, lessee will not be aware about that what lessor is earning, right? What lessor is earning. Because this is the rate which equalizes whatever you are getting in terms of lease payments, its present value, it should be equivalent to your fair value of the lease, right? Is that clear? Is that clear? Okay. In that case, normally in the question, either interest rate implicit in the lease is given or lessee's incremental borrowing rate is given. In most of the cases and in practical scenario, the lessee's incremental borrowing rate is required to be used. Initial direct cost. Then we discussed the initial direct cost. What is the initial direct cost? The incremental cost of obtaining a lease that has to be added to the right of use asset if it is borne by the lessee. Okay. Then we discuss the lessee accounting, and the lessee has to recognize the right of use asset because he is getting a right of use of that underlying asset. So he will debit right of use asset on the basis of present value of future lease payments, right? So right of use assets debit to leasehold liability. But if he is paying some initial direct cost, that has to be getting added to the right of use assets. If he has paid the advance rent, then again that advance rent has to be added to the right of use assets, right? The advance rent has to be credited and it has to be debited to the right of use assets. Okay. Then if the lessee is obliged to, after completion of the lease period, if he is obliged to do some restoration, do some dismantling, in that case, that provision for ARO has also to be added to the right of use asset. And as per Ind AS 37 provisions, contingent liability and contingent asset, this provision for ARO has to be credited. Right, friends? Again, we discussed one example, one layman language example and case studies to understand this concept. Then we have discussed, sir, is there any exemption from doing this all big calculation? I mean to say, from recognizing right of use asset, leasehold liability, discounting it, then depreciation charging, interest. Is there any exemption to it? So standard says that yes, there are two kind of exemption. One is short-term leases and second is low-value leases. What is meant by short-term leases? Short-term leases are those leases whose lease period is up to 12 months or 12 months, right? And where the purchase option is not available, right? A lease that contains a purchase option is not a short-term lease. A purchase option is not available, okay? And this short-term lease exemption has to be taken from the concept of the class of asset, class of underlying asset, right? If there are 5 leases in a particular class, for example, office building, there are 5 office building and all the office building is for a period of 12 months. So the lessee cannot do a cherry pick choice. If the lessee has to avail that short-term lease exemption, he has to avail this exemption for all the leases, right? Then we discussed low value leases. What is meant by low value leases? The low value leases means those leases where the value of the underlying asset when it is new is pretty small. It is immaterial or insignificant, right? And low value leases example could be your tablet, computer, laptop, printer, telephone, furniture, right? So normally the big companies are considering this as a low value item, right? For the people like you, like a student, it could be a material item, it could be a significant item, but from the company's perspective, like Reliance, Adani, Bharti Airtel, so these are the big billionaire companies, right? They are publishing the number in crores, so lakhs would be the immaterial amount for them, right? And in this case, we have discussed that in case of a low value asset, if the lessee is again subleasing that asset, in that case, this low value exemption cannot be availed. In case of short term lease, if the purchase option is available, then short term lease exemption cannot be availed, right? Right, friends? And then we did some calculation. I have shown you the illustration number 27, that how this right of use asset and leasehold liability is going to be measured. Then we discussed illustration number 28 as well, right? Where we discussed that how this right of use asset is going to be calculated. Then we discuss the subsequent measurement, that this right of use asset has to be either continue at a cost model or at revaluation model, right? And depreciation is required to be charged on the right of use assets, okay? And it can be measured at revaluation model if the other underlying asset of that class of asset is also taken at revaluation model, right? Lease liability is increased by the interest and decreased by the lease rental payments, okay? Then we discussed what is the expense which is going to be recognized in the P&L in Ind AS 116, depreciation of the right of use asset, interest payment on the lease liability, variable lease rents, which is not dependent on the index or rate, and impairment of the ROU asset, if any. Or what? In case of short-term lease or low value leases, of course, the rental payment will also come. The rent expense will come, right? Then We discuss illustration number 30, which is a complete question on this lease accounting, lessee accounting, and which includes your initial recognition and measurement, subsequent recognition and measurement, and your P&L charge as well, right? And your P&L charge as well. So we have discussed all these things here. Right, friends? I hope you guys have understood this thing pretty well. Let me know if you have any question from the last two lectures, then I'll move on. So I can see a lot of good morning from the students, Bhaskar, Janvi, Tushar, Viraj, Shubham. Guys, I hope you guys are clear on the last two lectures. Please let me know if there is any question so far. Any question from the last two lectures? No? You are pretty comfortable? Happy? Okay, great. Good morning, Mr. Pannu and Purvi Ben. Yes, so friends, now let's discuss illustration number 31 also. This illustration is, I would say, again, a very good illustration in terms of understanding the concept of subsequent measurement using cost model or understanding the concept of lessee accounting, right? Company EFG enters into a property lease with entity H. The initial term of the lease is 10 years. The initial term is given. The initial lease period is given, guys. Okay. Initial lease term is given with a 5-year renewal option. But a renewal option is also there. So we need to look at from the other information in the question, we need to see that whether the final lease period is 10 years or it should be 15 years, right? Because we remember the definition of the lease term. What is the lease term definition? NCP, non-cancelable period, plus RFP, rent-free period, plus ORP, optional renewal period, plus OTP, optional termination period. And in case of ORP, optional renewal period, we need to look at whether the lessee is reasonably certain that he will exercise the renewal option. And how he will be certain? There would be some information given in the question. The economic life of the property is 40 years and the fair value of the lease property is 50 lakh. See, economic life is 40 years. The life of the property is 40 years and fair value of the property is 50 lakh rupees. Company EFG has an option to purchase the property at the end of the lease term for rupees 30 lakhs. See, friends, now after 10 years, there is a renewal option of 5 years, and it says that the life is 40 years, fair value of the property is 50 lakhs. And after 10 years, the company EFG has an option to buy this property. There is an exercise price option is there. That end of the lease term for rupees 30 lakhs. The first annual payment is rupees 5 lakh, right? So here purchase option is given. Exercise price of purchase option is given. First annual payment is rupees 5 lakh with an increase of 3% every year thereafter. The first annual payment is 5 lakh with an increase of 3% every year thereafter. The implicit rate of interest is 9.04%. The implicit rate of interest is 9.04%. Entity H gives company EFG an incentive of rupees 2 lakhs payable at the beginning of year 2, which is to be used for normal tenant improvement. See, Entity H gives company EFG an incentive of rupees 2 lakh payable at the beginning of year 2. And at the beginning of year 2, this lessor is giving an incentive of rupees 2 lakh also, which is used for normal tenant improvement. Okay. Company EFG is reasonably certain to exercise that purchase option. And company EFG is reasonably certain to exercise the purchase option, right? So exercise price of purchase option in lease payment. You remember that lease payment definition? Fixed payment, in substance fixed payment. So in this case, fixed payment is 5 lakh. In substance fixed payment is 3% escalation, right? And variable lease payment on the basis of some index or rate, right? and exercise price of the purchase option, which is, and he is reasonably certain also. So how would EFG measure the right of use asset and a lease liability over the lease term? So guys, first of all, sir, if the information, if the sufficient information is not given in the question that whether optional renewal option, whether lessee is reasonably certain to avail the optional renewal option or not, sir, what we need to consider in that case, you need to consider that the lessee is not certain to renew the optional renewal period. In that case, like in this case, no sufficient information is given which says that the lessee will avail the optional renewal period, right? So in this case, you have to consider 10 years as a lease term. Is that right? You have to consider 10 years as a lease term. Is that clear, friends? Is that clear? So now let's discuss this illustration on the Excel file, and please let me know if my Excel file is visible. Please let me know if it is visible. Are you able to see this Excel file? Yeah. Are you able to see this Excel file, guys? Okay. Yeah. Yes. So friends, in this question, what all information is given? Let's discuss that. Lease term is equal to 10 years. Why? Because no information is given that the lessee is reasonably certain to exercise the optional renewal period. Discount rate is given, which is 9.04%. Purchase option is given. Yes. And it is reasonably certain also. Lessee is reasonably certain also. Exercise price is 30 lakh payable at the end of 10 years. Lease payment is 5 lakh, increased by 3% every year. Lease incentive at the beginning of year 2 is 2 lakh rupees. There is a lease incentive which is given by the lessor also. This lease incentive has to be netted off from the lease payments, right? So friends, first of all, what is my step? My first step is to compute the present value of the future lease payment, right? I need to compute the present value of future lease, okay? This is my step one from the lessee perspective to solve any problem. This is my step number one. Am I right? Step number one in lease calculation from the lessee perspective, step number one, calculate present value of future lease payments, right? Over the lease term. Year. How many years are there, friend? 10 years. 1, 2, 1 plus 1, and this is still 10 years. Then your lease payment will be there, lease payment. Okay. Then your present value factor will be there. Present value factor at the rate of 9.04%. 9.04%. Okay. Then your present value, right? Present value of future lease payments. I hope this thing we are very much clear that how to compute this present value of future lease payment. In the first year, what was my lease rental? 5 lakh, increased by 3% every year. Okay, 5 lakh rupees. And this 5 lakh rupee has to be increased by how much? By 3% into 3%. Okay. Sorry, into 103%. I'll do 103%, right? It is 103%. Okay. Then your again 103%, right? And so on and so forth till 10 years. This is your lease payments. Okay. This will be your lease payments over a period of 10 years. Just a minute. Right. Then your present value factor at the rate of 9.04%. Now you need to see whether this 5 lakh rupees has to be paid at the end of the year or at the beginning of the year. It says that the first annual payment is 5 lakh with an increase of 3% every year thereafter, right? And it says that entity H gives company EFG an incentive of rupees 2 lakh payable at the beginning of year 2. Payable at the beginning of year 2. Since it is given that payable at the beginning of year 2, what we can expect, what we can assume from this question, we can assume that the lease payments are happening at the beginning of the year. The lease payments are happening at the beginning of the year. That is why at the beginning of year 2, he is giving an incentive of rupees 2 lakh, right? In this case, friend, I have to consider an incentive also, 5 lakh 15,000, 5 lakh 15,000 minus 2 lakh rupees, minus 2 lakh rupees. Sorry, in this case, I need to pick the formula from this thing. Yes, right? Right? Is that clear? And what I have considered 5 lakh rupees fixed payment, 3% escalation as a in substance fixed payment, 2 lakh incentive I have deducted from the second year payment, and there is a purchase option also available at the end of the 10th year. And what is that purchase option? The purchase option is 30 lakh rupees. It is 30 lakh rupees. Okay. It is 30 lakh rupees. This is my purchase option. Now I need to put the present value factor. The present value factor for the year 1 is 1 only because the payment is happening at the beginning of the year. For the second year, it is 1. It is 1 divided by 1.094, right? 1.094. It is 1 divided by 1.094. Is that clear? In the third year, the same formula, 0.914 divided by 1.094. So I'll drag this formula till 10th year. Same formula for the purchase option as well, right? This is what we will see as a present value factor. And normally you have to keep the present value factor till 3 decimals. Okay. And this will be my this will be my present value of future lease payments, right? Present value of future lease payments. The total lease payment was 55 lakh 31,940, and the present value of the lease payment is 36,640 plus purchase option. Purchase option is 13 lakh 36,489, right? What is the total? What is my total lease payment, guys? What is my total lease payment? My total lease payment will be, what is my total lease payment? My total lease payment would be how much? My total lease payment would be how much? It would be 50 lakh 3686 plus 1336. It is almost 50 lakh rupees, right? It is almost 50 lakh rupees. This is my total lease payments. This is my total lease payments, right? In this case, this payment is at the end of the lease term. This exercise price is at the end of the lease term, right? So this is at the end of the 10th year. And in this case, your formula will be 0.445 divided by 1.904. Sorry, 1.904. I need to correct this formula. Just wait a minute. 1.904 1.904%. 1.0904. Sorry, I need to correct this formula. It should be 1.0904, right? Because it was 904%. 1.0904 will be there, right? And this will be again divided by 1.0904%. Yes, this is how your total lease payments will be 50 lakh rupees, right? What is the accounting entry? What is the accounting entry? Right of use asset account debit to lease liabilities, to lease liabilities. 50 lakh, 50 lakh. Is that clear? Is that clear? So how you will compute the present value factor? Let's say if 10% is the present value factor, you have to divide by 1 plus 10%. 1 plus 10% means 1.1. So likewise 1 divided by 1.904%. So 1.904, 1 divided by 1 plus 9.04%. So when you convert 9.04% into the decimal, it will come out as a 0.0904. Okay, so 1.0904. Is that clear? Whether this accounting entry is clear? The lease term you have cleared, lease payments you have cleared. Yes. Janvi, is it clear? Present value factor formula. This is the present value factor formula, Janvi. 1.0904. Any doubt in this question, friend? I hope it is clear to all of you. Is this accounting clear to all of you? Okay. So this is what I have again made a revision of lease term, lease payment, then creation of right of use asset and leasehold liability. Now let's move on to the next part. So this we have covered. This is what the calculations are also given in the PowerPoint presentation. Yes, so let's discuss this concept as well. Separating component of a contract, lease contract, right? Friends, for example, the standard says that to be covered any item as a lease contract, there must be a right to control the use of an identified asset. But when you enter into a lease contract, there are some components which is non-lease component. What is meant by that? For example, in a society where you have taken a flat on a rent basis, you are paying a rent to the landlord, right? And you are also paying a maintenance charges to the society residence welfare association or to the society club, or I would say uh, to the builder. You are paying some maintenance charges, right? So for paying a rent, you are getting a right to use of that flat. For paying a maintenance, you are getting a maintenance services, right? And what should be included in the maintenance services? For example, I am living in a society where I'm paying a rent and maintenance services. I am getting the security in terms of that society. So if any person has to come to visit me, first the security guard will stop him, right? He will check all his credentials, then a call will come to my flat that XYZ has come to meet you. Shall I send him to your flat? So if I'll okay that, if I'll okay, then only that person will allow to come to my flat. So that is number one. I'm getting a security service. Second, I'm getting a cleaning services, right? So every morning when I wake up and go outside to my flat, and I have seen that the entire, the common area is neat and clean. That is number two. Number three, I'm also getting a good path or passage to walk, to run, okay? Or the children or kids have some park or garden to play, and it is well maintained park and garden. So the point is, friends, in case of paying a rent to the flat, I am getting a right to use of an asset. In the case of maintenance, I am getting some services, right? I'm not getting uh, a right to use of an asset, but I'm getting some services. So the point is whether if you are paying for getting some services, is it a lease contract? Answer is no. Because why? Because item, for any item to be covered under the lease contract, there must be some underlying asset, right? But getting a security services is not an underlying asset, right? So friends, that is why the entities are required to assess that what is my lease component, what is not my lease component, what is my non-lease component, right? Sir, that is pretty simple, because you have said that you are paying rent to the flat owner and you are paying maintenance services to the society IWA. You are right. But friends, sometimes the contract are composite contract. For example, I have negotiated with my builder or with my landlord that I'll pay you 30,000 rupees only, right? Whatever you think, including maintenance, including everything. And that guy is paying out of this 30,000, that guy is paying 5,000 to the maintenance office, right? But my contract with the landlord is limited to 30,000 rupees. Now the question arises whether this entire 30,000 is for the use of the flat, or some services are also inbuilt in that 30,000. Of course, yes, some services are built in this 30,000. Because in the same area, if I'll not go by the society flat, if I'll go with the apartment, right, with the builder flat, not the society flat, probably I'll get this flat at 25,000 rupees or 24,000 rupees. So why I'm paying 5,000-6,000 rupees extra just because of those services, those security which I'll get in the society? Am I right? So friends, the concept is an entity shall account for each lease component of a contract as a lease separately from the non-lease component of the contract, unless the lessee may elect not to separate them and account for each component as a single lease component. Friends, sir, what happens if we are not able to evaluate practically also that yes, this contract includes some non-lease component also? Then standard says that you can take a assumption and you can elect not to separate them, and you can consider the entire lease contract as a lease contract, right? So that is there. But as a as a protocol, as a concept, you need to segregate the lease and non-lease component. The lease component has to be accounted for as per Ind AS 116. The non-lease component has to be accounted for separately, right? For example, from the lessor perspective, what lessor will do? The lessor will do 25,000 rupees as a lease accounting, right? And 5,000 rupees as a Ind AS 115 accounting. He is earning money from providing the maintenance services. From the lessee perspective, what lessee will do? Lessee will do the present value of future lease payments on the basis of 25,000 rupees. And every month when he is paying 5,000 rupees, he will recognize the expenses on a accrual basis in the P&L. That 5,000 rupees discounting is not required. Why? Because it is not a lease component. It is not covered in Ind AS 116. Is that clear? But sir, if there are, I understand the rent, I understand the maintenance services, For example, the lessee has told to pay the house tax, to pay the house tax, to pay some taxes, right? In that case, there is nothing which is coming out from paying the taxes, right? When the lessee was paying a rent, he was getting a right to use of an asset. When the lessee was paying maintenance services, he was getting the services in return. But by paying a taxes, what he is getting, and he has to pay the taxes because he has taken the property on the rent. So whether these taxes are a lease component or are considered as a non-lease component. So friends, standard says that you need to allocate the amount between the lease component and the non-lease component. For example, these taxes, whether these taxes will be part of a lease payment or it should be a part of a maintenance services, right? For example, I know that I have to pay 25,000 rupees as a lease rent and 5,000 rupees as a maintenance services, and 30,000 is a total contract. And I'm also paying a taxes. So how to compute this tax? I mean to say, how to allocate this tax as a non-lease component or as a lease component, right? So friends, let's understand with the help of this example. A lessee enters into a lease of an equipment. The contract stipulates the lessor will perform maintenance of the leased equipment and receive consideration for that maintenance services. Two things are there. One, lease of equipment. Second, maintenance services. The contract includes following fixed prices for the lease and non-lease component. So 80,000 rupees is the lease component and maintenance is the non-lease component. Non-lease component. The total is 90,000. Assume the standalone prices cannot be readily observed, so the lessee makes estimate maximizing the use of the observable information, the lease and non-lease component as follows, right? So, for example, when the lessee is paying a lease component and a non-lease component, right? The lessee is making a payment for the lease component, non-lease component, okay? And what is that? The contract includes following fixed prices. He has to pay 80,000 as a lease rent. He has to pay 10,000 as a maintenance, okay? And the standalone prices means he is not able to ascertain that what is my lease payment, and he is paying some additional amount as well. Right? So he is not able to ascertain that what is my market value of the rent, what is my market value of the maintenance services or other services, right? So in this question, it is given that, let's say, the lease component fair value is 85,000 and the maintenance portion fair value is 15,000, right? So in this given scenario, assuming lessee has not opted the practical expedient. What is practical expedient? I have told you initially, if lessee wants to opt for not to split the contract between a lease and non-lease, he can do so. Okay, he can do so. But as a good practice, he has to allocate the amount paid into lease payments and non-lease component, right? In this case, friends, what is written here? Total 90,000 payment has been made. Total payment is 90,000. 90,000 is total payment actually made, right? And friends, the fair value of the lease and non-lease component has been given. The fair value of the lease component is 85,000. The fair value of the non-lease component is 15,000. It is given in the question. So friends, in the question will ask you regarding the lease accounting. And the question will give you, see, that guy is paying you 90,000 rupees. Lessee is paying you 90,000 rupees, right? And in return, lessor is providing the lease service and the non-lease service like maintenance service. Standard says that whatever consideration you are paying you have to allocate the consideration between the lease component and the non-lease component. Sir, why it is required to be done? Why it is required to be split between the lease and non-lease component? Friends, what happens generally? Generally, you know, you are getting 30% benefit on the house taxes under Income Tax Act. When you compute the income from house property, you will get a 30% exemption while calculating the taxable income. Are you aware about that? Are you aware about that? Yeah. Are you aware about that? So let's say I am a landlord, I am a property owner, and I have given a property on a rental basis to Viraj. And I am telling Viraj that, see, Viraj, the rent of this property is 25,000 rupees. Okay. But I am also providing you many services. Like there is a security guard who is there, right? So of course, I'm paying the security guard and I have to recover it from you. I've also one full-time maid who is cleaning the house, who is cleaning the common area, parking area, passage area, right? So again, you have to pay me because you are parking your car. And I'm so Viraj asked me, sir, how much amount you want me for the services? So I told him that 25 is the market value of the rent and 5,000 is this one, 30,000 rupees total. But instead of splitting this contract, I have told him that pay me 30,000 rupees only on account of rent. Okay. Only on account of rent. I'll not charge you anything on the maintenance side, but I want the entire 30,000 rupees on in a rental kitty. So now the question arises, in this case, it is written in the agreement that I will provide the 1,000 square feet of the flat as well as I'll provide these maintenance services. Now the question arises, I have that from the lessee perspective, Viraj is paying me 30,000 rupees. So now Viraj needs to identify that this 30,000 rupees is all for rental or 30,000 rupees is for lease and non-lease component, rental and maintenance. But in the agreement, only 30,000 is there. Now he need to divide this 30,000 into two parts, lease, non-lease. So for dividing this 30,000 rupees into two parts, he wants to know the fair value of that, right? For example, when he checked into the market, the fair value comes out as 30,000 or 10,000, 30,000 for rent and 10,000 for maintenance. It means the total value is 40,000 rupees market value and he is paying 30,000 rupees. Probably he got some discount. That is why he has paid less. So now this 30,000 rupees to arrive at a right number, that what is my lease payment and what is my non-lease expense, he has to allocate this 30,000 in the ratio of 30:10. So he need to allocate this 30,000 in the proportion of 40,000 of fair value. Likewise, in this question, the lessee is paying 90,000 rupees and the fair value of the lease and non-lease component is 85 and 15,000, means 1 lakh rupees. So he need to allocate this 90,000 rupees into the ratio of 85 and 15. Okay. So 90,000, how he will calculate the lease value? 90,000 multiply by fair value of lease component divide by the total 1 lakh, which comes out at 76,500. Again, 90,000 multiply by 15,000 divide by 1 lakh. This will give 13,500. I hope you guys have understood the concept of separating the lease and non-lease component. Yeah. Is that clear? Yes. What is the accounting entry which we need to pass? For example, this is the 1 year contract only. I am assuming this is a 1 year contract. What is the accounting entry? Accounting entry is lease rent account debit 76,500, maintenance expense account debit 13,500 to bank account. If it is a short-term lease and I have availed an exemption of 12 months exemption. Sir, if it would be 3-year lease, then what will happen? For example, there will be a 3-year lease, right? In this case, this 13,500 maintenance expenses account debit to bank account has to be passed every year. And this 76,500 has to be discounted at present value. So the entity has to create right of use asset for 76,500 and the entity has to charge 13,500 every year in the P&L upfront. Is that clear? Janvi, is that clear? Yeah. Is that clear, Janvi? The lease component has to be considered for creation of right of use asset. The non-lease component has to be charged to the P&L on a regular basis, on an accrual basis. Friends, any doubts so far? Any doubts so far? Shall I move forward? Friends, while discussing the lessee accounting, I have discussed the initial recognition and measurement, means how to measure right of use asset, how to measure leasehold liability. Right of use asset is dependent on the lease liability. Okay. ROU asset is dependent on the lease liability. Is that clear? So friends, then we have discussed the exemption in case of short-term lease and low-value leases. Then we have discussed the subsequent measurement, which is cost model or revaluation model, charging a depreciation on the right of use asset and charging an interest on the lease liability and then paying the lease liability, right? Then we have discussed what? The separation of lease and non-lease component, right? The separation of lease and non-lease component, that if there is a lease and non-lease component, the entity has to allocate the payment between the fair value of lease and non-lease component, right? Now we are discussing what happens if there is a lease modification. And what is meant by lease modification, sir? The lease contract was for 10 years and we have done this lease accounting at the commencement date of the lease. So whatever future lease rental over the period of 10 years I am supposed to pay, I have done the accounting upfront, right? I have created right of use asset and I have credited lease liability and I am depreciating right of use asset and I am charging interest on the lease liability and paying the lease liability. That's all. Sir, what happens in a contract of 10 years if after 4 years there is a change in the lease, there is a modification in the lease, then what happens, right? And what is meant by modification? So let me tell you what is meant by modification. For example, you guys, let's say Janvi and Janvi and Purvi Ben or Namrata, Janvi and Namrata came to Delhi, Lakshmi Nagar for preparation of CA finals, right? So they have taken a flat, a 2-bedroom flat on a rental basis. And they are paying 25,000 rupees every month. Now what happened? One of their friend also wants to join them, right? So one of their friend wants to come to Delhi for the CA final preparation and they have requested Janvi and Namrata that can you please allow me to live in your flat? So they told yes, no problem at all. So the agreement was for a period of 3 years and after 1 year, their friend wants to join them. So landlord said that, okay, so as of now, you are the 2 girls who are living in this flat. But if you want your friend to join you, so I'll charge 5,000 rupees extra. I'll charge 5,000 rupees extra. Is there a modification in the lease? Is there a modification in the lease? Answer is yes. There is a lease modification. Earlier you were paying 25,000. Now you will pay 30,000 rupees. There is a lease modification. So the point is, we have, when we have started doing this 116 accounting, what we have done on the commencement date, on the basis of 25,000 lease rental, we have recognized right of use asset and we have credited lease liability. So our accounting is on the basis of this 25,000 rupees. But after 1 year, the scope of the lease has been changed. Means instead of 2 members, now there are 3 members. And that is why instead of 25,000 rupees, there is 30,000 rupees. So is there a lease modification? Answer is yes, there is a lease modification. There is a lease modification. Okay. So the question arises how to deal with this lease modification. How to deal with this lease modification. Second example could be in COVID time, we have seen practically there was a company which has occupied 20,000 square feet of space for their employees, right? After COVID, right, when this COVID came, they have surrendered 10,000 square feet of space, and now they are doing their work. Now they are doing their business in only the 10,000 square feet of space. So they have reduced their space by 50%. They have reduced their space by 50%, by 10,000. Okay, they have reduced their space, 10,000 square feet. Is there a lease modification? Answer is yes, there is a lease modification. So friends, we will discuss that whenever there is a lease modification, how to treat this modification. A lease modification means a change in the scope of a lease or a change in the consideration of a lease. A change in the scope of a lease or a change in the consideration for a lease that was not part of the original terms and condition of the lease, right? So in my last two examples, where Janvi and Namrata was sharing a house, a flat, and her friends wants to join them. So in that case, it was not formed part of an original lease contract. It was a subsequent development. In COVID time, when the 20,000 square feet, they wants to convert it into 10,000 square feet, it was not part of the original lease contract. The original terms and condition was 20,000 square feet, but it is a subsequent development, right? So friend, a lease modification means a change in the scope of a lease or a change in the consideration of the lease. When it is considered as a modification, either scope will be changed, right? Or consideration will be changed. And in that case, a lease modification accounting is required. For example, adding or terminating the right to use one or more underlying asset, or extending or shortening the contractual lease term, right? Or adding or shortening the contractual lease term. For example, earlier the lease contract was for 10 years. Now we are reducing it to 6 years. Again, it is a change in the scope of the lease. Okay. Guys, have you understood the modification, meaning of modification? Let's move forward. Now the question arises. In case of modification, when her friend joins her, when her friend join Janvi and Namrata, and the rent become 30,000 from 25,000, whether this 5,000 will be treated as a separate contract or this 5,000 will be treated as a modification in the existing contract. Friends, in this case, you need to look at if that contract is considered as a separate contract, there is no any problem. Why? Because the 25,000 rupees lease rental contract will continue and a new lease accounting will start on account of 5,000 rupees lease rental for 2 years, right? But if it is a change in the existing contract, then there is a problem. Then you have to revise the entire lease accounting. So for that, you need to understand in which scenario of modification it will be considered as a separate contract or it will be considered as an updation in the existing contract, right? So number one, if there is an increase in scope of the lease by adding the right to use one or more underlying asset. If there is an increase in scope of the lease by adding the right to use one or more underlying asset and increase in consideration by an amount commensurate with the standalone selling price of the increase in scope, right? So let's say, and I've seen it practically, when I was living as a student in the East Delhi area, so the landlord has 3 BHK house, right? And one room he has locked, and that room he was using like a store, okay? And it was a 2 BHK house, and we 4 friends, we 4 CA students or CA friends were living in that house. Now what happened, friends? When one of our friend wants to join us, right? And if we have to study, so 5 people and 5 students in 2 rooms will not be a good proposition for cracking the CA final exam. And that is why we have discussed with the landlord that, sir, we want your 3rd room as well. Can you give us? He said, okay, I'll give you 1 room additional. Okay. So in the earlier contract was 2 BHK. Now it become 3 bedroom, 3 BHK. So there is an increase in scope of the lease by adding the right to use 1 more or underlying asset, right? So this 2 bedroom become 3 bedroom. And he told us that I have to charge 7,000 rupees extra for this 1 room, right? 7,000 rupees extra for this 1 room. And we have also checked that if he will give this 1 room to others, not to us, he will charge around 7,000 rupees from others as well. Means whenever the scope is increasing, whenever there is an increase in scope, there is a increase in scope, and that increase in scope is equivalent to increase in consideration, right? Increase in the scope is resulting in increase in scope is resulting in the increase in consideration, resulting in increase in consideration, right? Increase in scope is resulting in increase in consideration. Is that clear? So in this case, if your scope is increasing, but your consideration is also increasing, and that consideration is increasing on the basis of fair value, on the standalone selling price for the increase in scope. It is on the basis of fair value, right? Standalone selling price means fair value, right? But if you will say that, okay, you guys are already my tenant and you are living this 2 BHK, okay, and I cannot give this 3rd room to anyone, because if I'll give the 3rd room to anyone, because the door is not separate, it is in the hall itself. So probably it will be not comfortable to in that case, it will not be considered as a separate lease contract. And you, just by the layman language logic, just understand that if your scope is increasing and the consideration is also increasing in terms of fair value, then of course it will be a separate lease contract. But your scope is increasing, but the consideration is not increasing to the extent it is just this one only. It means it is not at the fair value. It means it is more of a updation in the existing contract. Updation in the existing contract, right? Is that clear? So in that case, in the later case, you cannot consider this as a separate contract. Viraj, is that clear to you? Namrata, and underlying asset is 2000 square feet. At the beginning of year 6, lessee and lessor agree to amend the original lease for the remaining 5 years to include an additional 3000 square meter of office space in the same building. Friends, see the information given in the question. The lease is 10 years lease. And at the beginning of year 6 means if there is a 10-year lease, means 5 years have been completed and 6 years are 5 years have been completed and 5 years are yet to go. At the beginning of year 6, lessee and lessor agree to amend the original lease for remaining 5 years to include an additional 3000 square meter of office space in the same building. I'll split this into two parts. Up to the first 5 years, there was a office space of 2000 square feet, right? And from this date, from opening of the 6th year, from the beginning of the 6th year, the lessee and lessor agree to amend the original lease for the remaining 5 years. For this remaining 5 years, they want to amend this lease contract and they want to include an additional 3000 square meter of office space in the same building. So instead, for the next 5 years, instead of this 2000 square feet only, they want to add 3000 square feet area more, right? Okay. The additional space is made available for use by lessee at the end of the second quarter of year 6. At the end of the second quarter of year 6. But this additional space, so they have agreed at the beginning of the 6th year, they have agreed, okay, please amend my contract and I have to take this 3000 square feet extra. So lessor and lessee both agrees. But this 3000 square feet, the lessee is getting and the lessor is providing only at the end of the second quarter of year 6. Means he will be able to get this 3000 square feet only after 6 months, right? Only after 6 months means 4.5 years. He will be able to use this 3000 square feet of area only for 4.5 years. Is that clear? 5 years have already gone, and in the year 6, on the first 6 months, this 3000 square feet will not be available. Probably the lessor was doing some repair, okay, and after that the lessor will provide that to the lessee. So it means the 5000 square feet is available. The total 5000 square feet will be used by the lessee only in the last 4.5 years. In the initial 5.5 years, the lessee will use 2000 square feet. The increase in total consideration for the lease is commensurate with the current market rate of new 3000 square feet of office space, adjusted for the discount that lessee receives, reflecting that lessor does not incur cost that it would otherwise have incurred if leasing the same space to a new tenant. For example, marketing cost. How should the said modification be accounted for? And this additional 3000 square feet is in line with the market rental, right? Instead of this lessee, if the lessor will provide this area to a new tenant, probably he will charge the same rate. But he has given a discount to the lessee. And what discount he has given? He has given a discount because if he has to go for a new tenant, probably he has to pay some commission, brokerage, right? He has to incur some cost to procure that new tenant. But here he is giving that 3000 square meter space to the existing tenant, and he has saved the brokerage commission and other incidental cost. So that cost which he has saved, he is giving the discount to the lessee. That's all. Now the question arises, for this additional 3000 square meter, whether there is an increase in scope. Whether there is an increase in scope, answer is yes, there is an increase in scope. Whether the increase in scope is in line with the increase in consideration. Whether the increase in scope is in line with the increase in consideration, yes or no. The lessor has given a discount, but lessor has given a discount only to the extent the cost which he has saved. So guys, tell me the two things. Is there an increase in scope? Answer is yes, there is an increase in scope because 2000 becomes 5000 in the last 4.5 years. Yes, there is an increase in scope. Yes. Whether increase in scope is in line with increase in consideration. Whether increase in scope is in line with increase in consideration means whether increase in scope is equivalent to the fair value. of the market rent? Answer is yes. It is at the fair value of the market rent. So whether this modification will resulting into a separate lease contract or updation of existing lease contract, it will be tantamount to a separate lease contract, right? So the lease contract for 10 years, right, for 2000 square feet will go as it is, and the new lease contract for 4.5 years for 3000 square feet will again started, right? Will start it. So the lease accounting for 3000 square feet has to happen for 4.5 years, and the lease accounting for 2000 square feet has to happen for 10 years. Guys, I'm not getting a response from all of you. Are you able to understand this concept, or you are not able to understand this concept? This is a critical and important concept, and these kind of questions may asked in the examination. Viraj, are you able to understand this? Purvi Ben has replied that understood very nicely. Rahul has replied. What about others? Janvi has also replied. Okay, let's move on. We understood that if the increase in scope is in line with the increase in consideration, means there is a separate lease. Okay, increase in scope is in line with increase in consideration, it means it is a separate lease, new lease. It's separate lease. And now let's discuss what are the conditions when there is not a separate lease contract. When there is not a separate lease contract. And friends, let's discuss with the help of this summary chart, I would say. Friends, please understood this concept. Please understand this concept very, very, very beautifully, I would say. And I'll explain each and every aspect of it. Please understand this concept with a complete focus. Lease modification, right? If there is a change in consideration, if there is a number one, there is a change in consideration. If the change in consideration, okay, so first of all, what we have understood so far, there is a change in scope. So let me start with from this way. Just a minute. Sorry. Yeah. First of all, let's discuss this change in scope, right? If there is a change in scope, I mean to say there is an increase in scope. And increase in scope is in line with increase in consideration, right? And that increase in consideration is matching with the fair value of the increase in scope, right? Fair value of the lease rental. So the increase in scope is commensurating with the increase in consideration, right? In that case, it has to be considered as a new lease. It has to be considered as a new lease. But if there is an increase in scope, but increase in scope does not lead to increase in consideration to the extent of market value. And I have taken one example that when the landlord was given you the third room, he was only charging 2000 rupees. In that case, you are required to remeasure the lease liability on the modification date. Friends, whenever there is a change in scope, and increase in consideration is also on the basis of the market value, in that case, that modification will be accounted for as a new lease contract. But there is an increase in scope, but the increase in consideration is not in line with the market value, not in line with the standalone selling price. In that case, it is not considered as a new contract. It is considered as a changes or amendment in the existing contract. And whenever there is an amendment in the existing contract, you have to remeasure the lease liability on the modification date. You have to remeasure the lease liability on the modification date. Is that clear? Is that clear? Okay. How to do that? I will discuss that. Okay. Right. Now, coming to the another part, which is change in consideration. Now coming to the another part, which is change in consideration. Friends, if there is a change in consideration, for example, the contract was for 10 years and initially the lessor and lessee has agreed that the lessee will pay 10,000 rupees every year for the next 10 years. But after 2 years, the lessor told that, see, market value of the property are just surging. It is just going like anything. So I cannot afford this on 10,000 rupees. And at the end of the 2 years, the lessor told that for the remaining 8 years, I will charge 50,000 rupees. Friends, from the lessee perspective, of course, there is a lease modification. From the lessee perspective, there is a change in consideration and hence there is a lease modification. Now, what lessee has done, on the commencement date, the lessee has calculated or computed present value of the future lease payment over a period of 10 years on the basis of 10,000 rupees every year, right? But now lessor wants after 2 years, lessor wants 50,000 rupees every year. So this is a case of lease modification. This is a case of lease modification. In this case, the lease liability is going to be remeasured on the modification date. So after the end of the 2 years, the lease liability is going to be remeasured. Okay. Is that clear, friends? Is that clear? This lease liability is going to be remeasured. Okay. Okay. So it means on the modification date, the lease liability has to be remeasured for the remaining period of the lease term. Okay, sir, that we understood that lease liability is again needs to be calculated. So remeasure the lease liability at the modification date, and whatever change is there, it has to be adjusted with the right of use asset. Okay, sir. Sir, what happens in case of change in lease term? For example, the lease term was 6 years, but after 3 years, it was decided that it is not 6 years, it is 10 years. You remember I have told you the reassessment of lease term. Earlier, the lessee was not certain that he will avail the optional renewal period, but now he is certain that yes, he will avail the optional renewal period. Right? Right? So friends, in this case, the lessee has done the lease accounting on the basis of 6 years. He has considered 6-year future lease payment. He has discounted this future lease payment for a 6-year discount rate. But after the end of 3 years, he is saying no, the remaining period is not 3 years, the remaining period is 7 years. So there is a change in the lease term. So if there is a change in the lease term, in that case, again, the lease liability is going to be remeasured on the modification date. So if there is a change in the lease term, there is an increase. Change means increase or decrease. If there is a change in the lease term, I mean to say there is an increase. In that case, you have to remeasure the lease liability on the modification date and you have to make corresponding adjustment in the ROU asset. But if there is a decrease in the lease term, initially the lessee has considered the 10 years as a lease period, and in the 10 years, he has also included 4 years of the renewal period. So after 2 years, the lessee has assessed that he will not going to avail the optional renewal period. So the remaining period is not 8 years. The remaining period is 4 years only. Right? So in this case, there is a decrease in the lease term. And initially, he has calculated right of use asset and lease liability on the basis of 10 years. And he has considered 10 years of future lease payment. And he has considered the discount rate for 10 years and discounted for 10 years. Right? But now he is saying, no, it is not 10 years, it is only 6 years. So there is a decrease in the lease term. So standard says that since there is a decrease in the lease term, So you have to de-recognize the lease liability and right of use asset to reflect the partial or full termination. It means he has considered the 10-year of the, he has considered the right of use asset and lease liability for a period of 10 years, right? So now he needs to discontinue. Now he needs to de-recognize some portion of the right of use asset and lease liability, right? And whatever gain or loss will be there, it will go to the P&L. Okay. Friends, likewise, if there is a decrease in scope as well, earlier it was 5,000 square feet, now it becomes 2,000 square feet. In case of there is a decrease in scope, you need to de-recognize some portion of your right of use asset and lease liability. Whatever differential is there, it will go to P&L, right? But friends, when there is an increase in scope, but the price is not in line with the increase in scope, in that case, you have to remeasure the lease liability at the modification date and you have to make the corresponding impact to the ROU asset. Is that clear or it is not clear? Is that clear or not clear? Yeah. Let me summarize this now. Let me summarize this again for you guys. Situation number 1, increase in scope, right? Increase in scope is in line with increase in lease rent. Then there is a new lease. It's a new lease contract. Second, there is an increase in scope, right? There is an increase in scope, but it is not in line with increase in lease rent. The scope is increasing, but the prices are very high. It means somehow the lessor has increased the price for this entire contract, or the prices are very low. It means the lessor has given a blanket discount for this entire contract. So there is an increase in scope, but increase in lease rent is not commensurating with the market rent, or there is an increase in lease rental. There is an increase in lease term, right? Or there is an increase in consideration. In all these three cases, you have to remeasure. In all these three cases, rent is increasing, right? Rent is increasing. Remeasure the lease liability at modification date and adjust the ROU asset. Adjust the ROU asset. Okay. If still something remains, then it will go to P&L. Number 3. What is number 3? Your number 3 is decrease in lease term and decrease in scope, right? Decrease in lease term and decrease in scope. Number 3. Decrease in lease term. Decrease in lease term, decrease in scope. In all these cases, you have to de-recognize. You have to de-recognize the ROU asset or lease liability partially, right? And take the impact into the P&L. Take the impact into the P&L. I hope now it is clear to all of you. I hope now it is clear to all of you guys. Yes or no? Is that clear to all of you? The concept, if there is an increase in scope and the lease rental is also in line with the market rent, of course, it's a new lease contract. There is an increase in scope but lease rental is not increasing in line with the market rent, then you need to remeasure the lease liability at the modification date, adjust your ROU. It is more like a updation in the existing lease contract. Whenever there is an increase in lease term, the lease term is also increasing. If the lease term is also increasing, then you have to remeasure the lease liability at the modification date. Okay. And you need to adjust the ROU asset. If there is an increase in consideration, again, you have to remeasure the lease liability at the modification date because your ROU will also increase, lease liability will increase, right? And adjust it to the ROU asset. But there is a decrease in lease term. The lease term is decreasing, or your scope is also decreasing. In that case, you have to de-recognize the right of use asset and lease liability, and you have to take it to the P&L. You have to take it to the P&L. Is that clear? You have to charge it to the P&L. Yeah. Now, friends, we will do some case studies. We'll discuss some case studies, and then you will be able to understand the concept of modification completely. Okay. So it's 8:26 now. Let's have a 5 minutes break, and I will start at 8:31. Okay. And then I'll solve some practical case study for modifications, and then we will be covering lessor accounting, and then we will conclude the session. So let's have a break for 5 minutes. this illustration number 34 to understand the practical aspect of lease modification and how the calculation has to be done for lease modification. Illustration number 31 says that lessee enters into a 10 years lease for 5,000 square meter of office space. Lessee enters into a 10-year lease for 5,000 square meter of office space. The annual lease payments are 1 lakh rupees payable at the end of each year. So the lease term is given, which is 10 years, and the underlying asset is 5,000 square meter. Annual lease payment are 1 lakh payable at the end of each year, it is given. Interest rate implicit in the lease cannot be determined, and hence lessee's incremental borrowing percent per annum rate is also given. At the beginning of year 7, means after 6 years, lessee and lessor agree to amend the original lease by extending the contractual lease term by 4 years. So initial lease contract was for 10 years. Now they want to make it at 14 years. They want to make it for 14 years, right? So the annual lease payments are unchanged. That is 1 lakh rupees payable at the end of each year from year 7 to year 14. So annual lease payments are same. It is 1 lakh rupees per year, right? But the only thing is the lease term has increased. So modification, in this case, this modification leads to increase in scope by increase in the lease term, right? So friends, what to do now? There is an increase in lease term, right? In that case, what to do? Your ROU asset and liability is also required to be increased. So you need to remeasure the leasehold liability on the modification date, right? And it says that the lessee's incremental borrowing rate at the beginning of year 7 is 7% per annum. So friends, originally the borrowing rate, incremental borrowing rate is given, which is 6% per annum. And on the date of modification, it is 7% per annum, right? So first of all, on the commencement date, you need to compute your lease liability on the basis of 10 years, right? On the basis of 10 years, you need to compute your lease liability. Then you need to remeasure your lease liability on the modification date. I mean to say for the remaining period of 8 years, because this is happening at the beginning of year 7. And whatever difference is there between the carrying value of the lease liability at the end of the 6th year, means beginning of the 7 years, versus the remeasured liability, the difference will go to ROU asset, right? Is that clear? And friends, for calculating the revised lease liability, you need to consider the discount rate of 7% per annum, not 6% per annum. For the initial lease, you need to consider 6% per annum, but for the revised lease, you need to consider 7% per annum, right? So let's solve this question using the steps so that you will be able to understand how to solve this kind of problem in the examination, right? Is that clear? And let me take you guys on the Excel file. This is illustration number 34. Illustration 34. Friends, please let me know if this Excel file is visible. And I'm explaining you illustration number 34 from ICI study material. Illustration number 34 from ICI study material. Hers is asking, sir, if there is change by the lessor, when change is lease term, if there is a change by lessor, when change in lease term without change in scope and consideration, should it be modification? Change in lease term is itself a modification. The original lease term was 10 years. The revised lease term is 14 years. What is that? It is also a change in scope. So change in scope does not mean that only change in underlying asset. If the period is changing, again it is a change in scope, right? For example, Hers came to me and he said that, sir, I need your car for 2 days, right? So what is the original contract? It is for 2 days. So then after one day, after completion of the first day, he called me in the night and he said, sir, I need your car for another 5 days. Is there a change in scope? Answer is yes. The period has been changed. No? Second, Harsh told me, sir, at the end of the first day, he said that, sir, I don't need the small car, I need the sedan car or SUV. It is again a change in scope, but it is for the underlying asset. Is that clear, Hers? So that is why in the standard, the accounting treatment is given that if there is an increase in scope, means underlying asset with the increase in rental, in that case, what will happen? If there is an increase in lease term, then what will happen, right? So it will be considered as a modification. Right, Hers? Increase in scope, increase in consideration, decrease in scope, decrease in consideration, decrease in lease term, increase in lease term, all these are considered as a modification. Yeah. Let's solve this question. Illustration number 34. In illustration number 34, what informations are given? In illustration number 34, initial lease term is given, which is 10 years, right? Initial lease term is given, which is 10 years. Lease payment is 10,000. Lease payment is 1 lakh. Discount at the rate of discount rate at the commencement date is 6%. Modification is there. Yes, increase in lease term by 4 years. In this question, your initial period was 10 years, but in the beginning of 7 year, it was extended to another 4 years. So the total period become 14 years. Total period become 14 year, and there is an increase in lease term by 4 years, right? And when it is modified at the beginning of year 7, means at the end of year 6. Lease payment is 1 lakh rupees, and there is a discount rate. At the commencement date is 6%, but at the modification date it is 7%. The discount rate at the modification date is 7%. And your total lease term becomes 14 years. We need to compute the impact of modification. Calculate the impact of modification. With this question, you will be able to understand the entire modification accounting. Let's solve this problem, right? Solve this question. Solution. While doing this solution, first of all, calculate present value of lease payment on the basis of original terms, right? What is your step number one? Step number one, calculate present value of lease payments, on the basis of original terms, right? What is my original terms? My original terms is 6% is my discount rate, period is 10 years, and rental is 1 lakh rupees per month. Okay. Per annum, not per month, per annum. Then start this thing. So what is the first thing? First thing is your year, then lease payment, then present value factor, then present value of future lease payments, right? So present value factor at the rate of 6%. Sorry. And present value of future lease payments. Okay. Now, how many years are there in the original lease period? It is 10 years. your lease payment should be 1 lakh rupees every 1 lakh rupees is the lease payment, and this is consistent in every year. There is no escalation clause in the question. Your present value factor is 6%, and the payment is happening at the end of the year, and that is why it is 1 divided by 1 point, how much? 1.06, right? 6%. 6 divided by 100 means 0.06. Is that clear? Again, divide by 1.06, so on and so forth. What is the total present value of future lease payment? It is 736,009. The total payments are 10 lakh, but the present value of future lease payment is 736,009. Right? This is the at the time of initial recognition. This is my ROU asset and lease liability, right? What will be my initial recognition? Initial recognition at the beginning of year one, right? What is my initial recognition at the beginning of year one? Right of use asset, debit to lease liability credit. By how much amount? Lease liability will be credited by 736, and with this value, right of use asset will be created. Is that clear? I think so far things are very much clear. Now you have to move to the step number 2. What is the step number 2? Step number 2 is prepare lease liability schedule on the basis of original terms. What is my step number 2? Step number 1 is calculate present value of lease payment. Step number 2 is prepare lease liability schedule. Step 2. Prepare lease liability schedule. On the basis of original lease terms. Prepare lease liability schedule on the basis of original lease terms, right? Again, in this case, year, then your opening balance, then interest, payment, and your closing balance. So again, how many years are there? 10 years. What is my opening balance? Of the lease liability? Students, can you please participate? Whatever I'm asking, can you please participate in that? What is my opening balance of lease liability? 736,009 is my opening balance of lease liability, and I need to compute interest at the rate of 6%. Simple, I am doing the lease liability and ROU accounting on the basis of original lease term, right? It is 6%. Payment is happening at the end of the year. This payment will be there, and closing balance will be opening balance plus interest minus payment, right? This is how this has to be done. Same way, The closing balance in the first year will become the opening balance of the second year. Right? So on and so forth. This calculation will go on. This calculation will go on. Right? And at the end of the 10th year, this will become zero. But you know what happened? What happened? In the beginning of year 7, means at the end of year 6, the liability was 346511. This modification has happened. The modification has happened at the end of year 6. In the beginning of year 7 means what? In the beginning of year 7 means at the end of year 6. Right? What is my lease liability at the end of year 6 on the date of modification? My lease liability is 346511. Then what will be my next step? What will be my next step? Tell me what could be my next step. My next step number 3 is calculate balances at the date of modification, that is end of year 6. Calculate balances. Step number 3. Calculate ROU and lease liability balances. Balances on the date of modification. That is at the end of year 6 in this case. Right? At the end of year 6 in this case. Okay. Calculate ROU and lease liability balances on the date of modification, that is at the end of year 6. What is my lease liability and what is my ROU balance? Right of use asset, lease liability. What is my ROU opening balance? My ROU opening balance was 736009, right? And my lease liability opening balance was that only. But I'm talking about the closing balance. This ROU got depreciated, accumulated depreciation. ROU got depreciated for 6 years. This divide by 10 multiply by 6. What is my carrying value? My carrying value of ROU is 736 minus 441. And what is my carrying value of liability at the end of this year is 111. 511. These are the balances which are lying on the date of modification. Step number 1, compute right of use asset on the basis of present value of future lease payment. Step number 2, compute the lease liability schedule. Prepare the lease liability schedule. That what is the closing balances of lease liability, right? Number 3, identify the right of use asset and lease liability balance on the date of modification. Now step number 4. What will be the step number 4? Now the time of modification has come. Now you need to compute the present value of future lease payment, revised lease liability on the date of modification basis revised lease term. Right? Step number 4. Calculate revised lease liability on the basis of revised lease terms, right? On the date of modification. That is start of year 7, means end of year 6. Right? Or in this case, the discount rate is 7%. Again, my year, then my lease payment. So let me take the headers from here. My year lease payment present value factor will be at 7%, not at 6%, it will be at 7%. Then fair value, present value of future lease payment. And the year will start from year number 7. 7, 8, 9, 10, 11, 12, 13, 14, right? Because the total lease payment is 14 years. and the lease payments are also 1 lakh rupees. The lease payments are 1 lakh rupees, right? Sorry. The lease payment are 1 lakh rupees. Okay. Now, what is my present value factor at 7%? Now I need to compute for the revised lease liability for the modification. This is the first year. The modification, this is the first year. And hence it will be applied as 1 divided by 1.07. The discount rate is not for the 7th year, it is for the first year, right? Just for the sake of understanding, I have written this year as a 7, 8, 9, 10, 11, 12, 13, 14, right? It should be 1, 2, 3, 4, 5, 6, 7, 8, 5, 6, 7, okay? Or 5, 6, 7, 8. So the present value factor has to be calculated on the basis of revised discount rate, which is prevalent on the date of modification. Okay. This is how your present value factor will be computed, and this is how your present value of future lease payment will be computed, and your total lease liability, the revised lease liability comes out at 597,129. Okay. 597,130. So you can compare that the lease liability on the modification date was 346,511. And it was revised 597,130. 597,130 on the basis of revised terms and conditions, right? So this liability has been revised. Now, what is my step number 5? You need to compare revised lease liability with the existing lease liability on the date of modification, right? What is my revised lease liability on the date of modification? Revised lease liability on the date of modification. Revised lease liability on the date of modification is 597,130. Number 5. Compare revised lease liability with existing lease liability. On the date of modification. Revised liability, existing liability. Revised liability is 597,130. Existing liability is 346,511. Right? How much increase is there in the liability? Increase in liability. Increase in liability. How much is the increase in liability? 597 minus 346,511. This is my increase in liability. This is my increase in liability. Now what accounting? Now what accounting needs to be followed? What accounting needs to be followed? This increase in liability. What is my step number 6? Whatever there is an increase in liability, adjust the ROU asset with the change in lease liability. Adjust the ROU asset with the change in lease liability. Step number 6. Step number 6. Adjust the ROU asset with increase in liability. In liability. What is my existing ROU asset? What is my existing ROU asset? It is 294,403. How much is increase in liability? How much is increase in liability? 250,619. What is my revised ROU asset? What is my revised? What is my revised ROU asset? My revised ROU asset is 545,023, right? 545,023. What is my revised balances? What is the accounting entry? Again, you will debit ROU asset account debit to lease liability. This entry you need to pass on the date of modification to liability, revise to lease liability, credit. By how much amount? 250,619. And your revised balances for ROU and lease liability will be, what is your revised ROU final? ROU asset and lease liability. How much is your revised ROU asset and lease liability? 545,023 and lease liability is 597,130. This will be your final balances. This will be your final balances. I hope this is clear to all of you. Guys, this is a modification accounting. Step number 1, very simple. We have computed the present value of future lease payment on the basis of original term, like we were doing earlier also, because this is how we will be able to know what is my original ROU asset, what is my original lease liability. Step number 2, we have prepared lease liability schedule on the basis of lease terms, right? Step number 3, we have computed ROU and lease liability balances on the date of modification. What is the carrying value on the balance sheet on the date of modification? Then we have computed the revised lease liability on the basis of the revised term, on the basis of revised discount rate. Then we have computed that what should be my revised lease liability on the date of modification, right? And we have compared with the existing liability. There was an increase and we have adjusted the increase in the right of use asset, right? And this is how we got the revised ROU asset and lease liability balances. Janvi is asking, sir, can we compute present value by present value factor in case of same installment instead of calculating separately? Yes, Janvi, you can do that. But why I am preparing this complete schedule? Because generally in the examination, you will find that there could be a change in the lease rentals, right? For example, in substance fixed payment will be there, like escalation rates. For example, incentive will be there, or there could be a changes in the installments in the every second year or third year. So that is why I've shown that. But if the installments are same, time period is same, you can apply the present value of annuity factor, right? I hope it is clear to all of you guys. I hope it is clear to all of you, friends. Is that clear? Not clear? Clear? Okay. This is how this accounting is there, and the solution is also given in the PowerPoint presentation. Right? Is that clear? Yes. Now let's discuss one more case study relating to the modification. A enter into a 7-year lease for office space. What was the existing term? It was 7 years. Lease rent for the first 2 years is 30,000 per annum, payable at the beginning of each year. After 2 years, rental will be reassessed using a retail price index. This rental is on the basis of a rate or index, right? So it has to be considered in the future lease payments, which at present is 126. Revised rental will become 32,000 per annum. The lease period is 7 years. For the first 2 year, lease rental was 30,000 per annum, right? And after 2 years, it become 32,000 per annum. incremental cost of borrowing is 10%. Discount rate is given. Lease term is given. In this case, there is an increase in consideration. There is an increase in consideration. So you have to reassess your lease liability. You have to reassess your lease liability on the modification date. First, you need to compute your ROU asset and lease liability on the basis of original terms. Second, you need to compute the carrying value of the lease liability on the date of modification. Third, you need to finalize the balances of ROU asset and lease liability on the basis on the date of modification. Number 4, you need to compare the revised lease liability with the existing lease liability. Number 5, you need to adjust the increase or decrease in lease liability with the ROU asset, right? And this is how you will do this accounting. First of all, on the day one, like Janvi, you were saying, because in this case, as per the original term, the every year rental installment was 30,000, and that is why they have used the annuity factor for 7 years. So what was the accounting entry? Right of use asset account debit to lease liability. So this lease liability present value is 160658, and this is the value of your right of use asset. Okay. Then after 2 years, the lease liability, after 2 years, this lease liability. So what happens in the next 2 years? Your right of use asset will be depreciated every year. So carrying value of ROU asset will be there. And your lease liability has to be increased by the factor of interest rate and reduced by the factor of payment of 30,000. So after 2 years, the lease liability is 125096 and right of use asset is 114756. Step number 2, right? Is that clear? So this is my lease liability and ROU asset as per the existing terms. You remember step number 1, compute lease liability and ROU asset on the basis of existing terms on the commencement date. Number 2, step number 2, compute lease liability and ROU asset, right? Prepare lease liability schedule and compute the lease liability on the date of modification. Step number 3, compute ROU asset on the date of modification. Okay, or I can combine step 2 and step 3. I can say that compute lease liability and ROU asset on the date of modification. Step number 4, compute revised lease liability on the basis of revised lease terms. So the revised lease liability on the basis of 32,000 rupees for the remaining, how much year? For the remaining, it is increased after 2 years. After 2 years, it is increased. And it is payable at the beginning of each year. The lease rental is payable at the beginning of each year. So the first year rental has been paid, the second year rental has been paid, and after 2 years, the rental has been reassessed at 32,000 per month. So this will become your 133,436. The revised lease liability on the basis of revised lease term will be 133,436. Friends, in this case, you need to compare 125096 with 133,436. So your lease liability is increased by how much? 8340, right? 8340. And this ROU asset will also be increased by 8340. So adjusted value of ROU is 123095, right? Will now be depreciated over the remaining period of 5 years. Is that clear? Is that clear, friends? Yeah? I hope it is clear. Increase in 2000 will not be considered as variable. It depends on rate. Janvi, it is dependent on the retail price index. You remember in calculation of variable lease payment, what we have considered earlier? Let me show you what we have considered in the calculation of lease payment. What we have considered? Please read that. Variable future lease payment for the lessee includes variable lease payment that depend on an index or a rate measured using a prevalent rate at measurement date. If a variable payment is depending on an index or a rate, right? For example, wholesale sale price index, retail price index, right? Or it's a escalation rate, then it will be considered as a future lease payment for the purpose of computation of lease liability, right? It is part of the lease payment. It will not go to P&L. right? Is that clear, friends? Is that clear? I hope it is clear to all of you. Now the homework is whatever concept I have taught you so far. I want all of you to do all the questions from the ICI study material, all the questions. I have covered maximum important questions, which is touching all the concepts, but you guys have to revise. You guys have to solve all the practical problems and questions from the ICI study material. In the next class, I'll show you a practical annual report as well, right? Yes, Janvi, it is on the basis of index, and that is what I'm saying. In case of an index, you have to consider this lease payment, right, while computing the lease liability. See, guys, first of all, if you have to do the lessee accounting, what you will do? You will discount, you will compute the present value of future lease payments, present value of future lease payment. So while computing the present value of future lease payment, what you will require? You will require three things. One, lease period. What is my lease term, right? And how this lease term will be identified, I have told you. Lease term is equal to NCP plus RFP plus ORP plus OTP. Okay, sir, I have understood the lease term. Then what else I'll require? I'll require what is my future lease payments. So for calculating my future lease payment, I need to see the definition of future lease payment. What is the definition of future lease payment? Fixed payment plus in substance fixed payment plus variable payments on the basis of an index or a rate plus exercise price plus even penalty in case of termination option plus residual value guaranteed by the lessee. These are the 5 elements which needs to be considered for the future lease payment, right? So then you have computed the future lease payments. Now the third thing is, okay, sir, I have understood the lease term, I have understood the lease payments. Then how to compute the present value? By discounting. It means the third thing you need to require the interest rate implicit in the lease, the lessee's incremental borrowing rate, the discount rate, right? So my dear students, while solving the Ind AS 116 problems, Ind AS 116 question, you need to identify the lease term on the basis of guidance which I have explained you. You need to identify the lease payments on the basis of guidance which I've explained you, and then you need to also identify the discount rate, right? And this is how you will be able to compute your lease liability, and this is how you will reach to the ROU asset. Janvi, I hope you have understood so far. Okay, so you are asking that why we are not taking into consideration 32,000 on day 1 instead of 30,000 for computing third year value. Okay, understood. So basically, yes, Janvi. So basically, in this question, what happens? In this question, so they have considered that since it is assessing after 2 years, right, and the lease payment is happening on the beginning of the year, they are assuming that the end of the 2 year, the payment for the third year has also been made, and it is made applicable for the first year, right? Because the retail sale price index after 2 year rental will be reassessed. After 2 years, rental will be reassessed using a retail sale price index, which at present is 126, right? And revised rental cost is 32,000 per annum. So in this question, it is assumed that since the rental is getting reassessed after 2 years, right, and the payment has been made on the first day of the third year, which is equivalent to the close of the second year, and that is why they are considering 32,000 for the remaining 4 years only. So this is the reason. Okay. But if you will, in case of any doubt, if you will write this assumption that we are assuming that from the beginning of the third year, 32,000 rental payment has been made. If you will take this assumption also, then the answer will be correct. Okay, then the answer will be correct. Don't worry about that. Right, Janvi? Is that clear? Is that clear? Or still you have some doubt? And now let's discuss lessor accounting. Lessor accounting. Since we discussed so many concepts with the perspective of the lessee, the lessor accounting is pretty similar what we have learned so far in accounting standard 19. And this lessor accounting has not been changed much, or even I would say it has not been changed in comparison to its predecessor standards, right? So the lessee accounting has completely been changed in comparison to our old accounting standard, in comparison to our old Indian accounting standard. The lessee accounting has completely been changed, but the lessor accounting has not been changed. And let me tell you the reason for that. In lessee accounting, as I told you, there is no concept of operating lease and finance lease. There is no concept of operating lease and finance lease. But in lessor accounting, the concept of operating lease and finance lease is there. The concept of operating lease and finance lease is there. And why the concept of operating lease and finance lease is there? And I'll explain you. First of all, friends, in case of a lessee, you guys have so far understood that whenever the lessee is getting a right to use the underlying asset, whenever the lessee is getting a right to use the underlying asset, right to control the use of an underlying asset for a specified lease period, tell me who is controlling the right? Who is controlling the right to use? Lessee is controlling the right to use. Who has all the rights relating to the use? Lessee has all the rights relating to the use. Lessee has all the rights relating to the use, right? So friends, if a party has a right to use for something for a specific period of time, which is a non-cancelable lease period, then why the rights should not be capitalized in the books of accounts? The same thing the same thing you are doing for intangible asset also, na? The government is giving you a license. What is a license? License is the right to use of that property. So if you are doing the same thing for intangible asset, then why you are not doing? Why you are not capitalizing the right where you get the benefits, where you get the rights to use that asset, right? And this right is for a specific period of time. Then why not to capitalize the right to use? And why not to depreciate the right to use? And that is why in case of a lessee, the concept of operating lease and finance lease have been wiped out. In case of a finance lease, the lessee was recognizing the asset earlier also. Why? Because the finance lease is somehow considered as a life of the entire lease period, right? The life of the asset. So finance lease is like where the ownership is supposed to be transferred. But in case of a lessee accounting, the standard setter says that doesn't matter. If the life of the asset is 20 years and you are getting into a lease for 16 years and you are saying that it is a finance lease, you are recognizing the asset. But you are getting that asset for 5 years and you are not recognizing the asset, that is not right. Because if you are getting for 16 years, you are getting a right to use that asset for 16 years. But if you are taking it for 5 years, you are getting a right to use for 5 years. The landlord cannot interfere in the period of 5 years. You have a full right relating to the use. So why you are not capitalizing those 5-year rights and in your balance sheet, right? So that is why from the lessee perspective, the concept of operating lease and finance lease has been gone out. But in case of lessor accounting, the operating lease and finance lease still exists. Why it still exists? Because lessor is someone who is the owner of the property. Lessor is someone who is the owner of the property. In any case, lessor will recognize the asset in its books of accounts. Am I right? Lessor is someone who is the owner of the property, but lessee is not the owner of the property. So in case of a lessee, the liability and asset was a off balance sheet item. But in case of a lessor, the asset and liability, if the lessor will have some liability, for example, lessor has take a loan and purchase the asset. So lessor will have a liability and asset in the books of accounts. And then lessor has leased that asset, right? So the asset is there in the lessor books only. Am I right? But now, if the lessor is having the asset in its books of accounts, then you need to see who is having the majority of the rights. For example, if risk and reward, if risk and reward will be transferred to the lessee, then it will be considered as a finance lease. But if risk and reward will not be transferred to the lessee, then it will be the operating lease. Friends, if it is an operating lease, then who will show the asset in the books of the in books of accounts? Lessor will continue to show the asset in the books of accounts in case of operating lease. Lessor says that it is an operating lease arrangement, and lessor is leasing a office building for a period of 20 years, right? Or let's say the life of the office building is 20 years, but lessor is transferring the office building on a rental basis for a 5 years period. The value of the building is 1 crore. So of course, lessor will show it as a property, plant and equipment or investment property, right? Lessor will recognize that asset in the books of account. Lessee will recognize the right of use of that asset on the basis of present value of future lease payment for the period of 5 years. So lessee will capitalize only the right of use relating to 5 years, but lessor will recognize the asset at rupees 1 crore, which is the ownership cost, which is the cost of purchase, right? But if it is a finance lease, if it is a finance lease, for example, the life of the property is 20 years and the asset has also been leased out for 20 years. So in that case, lessee will capitalize that asset on the basis of 20 years. But it is a finance lease. The risk and reward is getting transferred. So in this case, lessor will de-recognize the asset and lessor will recognize the finance lease receivable asset. Finance lease receivable asset, right? So in any case, lessor will have one asset in the books accounts. In any case, the lessor will have one asset in the books accounts. In case of operating lease, the lessor has property, plant and equipment or investment property as an asset. In case of finance lease, the lessor will have finance lease receivable as an asset. But if I talk about the lessee, and this finance lease receivable is again present value of future lease payments for a period of 20 years. But in case of from the lessee perspective, if it was not a finance lease, it was an operating lease in our old standard. In operating lease, even though the non-cancelable period is 20 years, for example, still the lessee will recognize the lease rent only on the accrual basis. Means sitting on the year 1, the lessee will not recognize anything relating to the year 2 to year 20, right? So this is what the lessee will recognize. Is that clear? In the books of lessor, the lease classification has to be made at the inception date. If it is a finance lease, means the lessor has transferred substantially all the risk and reward incidental to the ownership of an asset. If it is an operating lease, the risk and reward has not been transferred incidental to the ownership of the asset. Can you remember what 5 indicators? What are the 5 indicators which says that it could be a finance lease? For example, the contract says that the lease transfer ownership of the asset to the lessee by the end of the lease term. By the end of the lease term. So the contract says that by the end of the lease term, the ownership has to be transferred in favor of the lessee. The ownership has to be transferred in favor of the lessee, right? It is written in the contract. Purchase option. The lessee has a purchase option. So first, the contract clearly says that at the end of the lease term, the asset will be transferred to you. It means it is a finance lease. The risk and reward lies with the lessee. There is a purchase option which is available to the lessee. The agreement says that, okay, we are leasing you the office building for a period of 20 years, or we are leasing you the car for a period of 10 years or 7 years. And at the end of the lease term, right? At the end of the lease term, the car will be transferred in your favor at a very minimal amount, right? which is far less than the fair value of that asset at that point of time. For example, after 20 years, the fair value of the asset would be 20 lakh rupees, for example. And the lessor says that I'll transfer that asset at 25% of the fair value at that point of time. So it means the lessor is giving the lessee an option to purchase the asset at a very minimal price, right? The lessee has an option to purchase the asset at a price which is expected to be sufficiently lower than the fair value at the date the option become exercisable, right? And hence it is reasonably certain that of course everyone will exercise the option. Lease term. The lease term covers the major part of the economic life of the asset. Although the purchase option is not there, ownership transferring option is not there, but the life of the asset, life of the machinery, or let's say car in the classic example. If you are using a diesel car, the life in Delhi and NCR is only 10 years. So the Oryx Auto is the company which is leasing the car. If the Oryx Auto has leased you car for a period of 8 or 9 years, so it means it is a kind of a finance lease. The lease term covers majority of the economic life of the asset. Or present value of the future lease payments. The present value of the future lease payments almost equals to the fair value of the lease asset. I know that the value of my car is 10 lakh rupees and I'm leasing this car in the favor of a company for a period of 9 years, right? And if I will compute the present value of the lease payments for the period of next 9 years, it will be substantially equivalent to the 10 lakh rupees. It means somehow I am recovering the cost, right? So in this case, it is again an example of finance lease. Or the asset is of a specialized nature. The asset have been manufactured, constructed, prepared, right? Only as per the use of the lessee. Only as per the use of the lessee. Okay. In that case, it is also considered as a finance lease. These all cases, in all these cases, these are the indicators of the finance lease. And the same indicator were there in accounting standard 19 also. In our old Ind AS 17 also, right? Janvi is asking, sir, so in case of finance lease, depreciation will be claimed on the same asset by both lessor and the lessee. Janvi, in case of finance lease, lessor will recognize the asset. Lessor will recognize the asset. Lessor will recognize the financial asset, which is finance lease receivable. And on finance lease receivable, depreciation is not allowed. Okay, it is a financial asset. In case of a finance lease or whatever operating lease from the lessor perspective, the lessee is not required to do any classification. Lessee is just required to see what is my lease term, what is my future lease payment. Like in case of a finance lease from the lessor perspective, probably if the lessee has a purchase price option or the ownership will be transferred, in that case, the lessee, while calculating the lease payments, the lessee will also consider the exercise price to be payable at the end of the year. And I have shown you illustration number 31, right? Illustration number 31. Yes, I have shown you the illustration number 31, which gives you the purchase price option, right? And since it is a kind of a situation where the lessee will enjoy the ownership of that asset after the end of the lease term, so the depreciation will not be on the basis of the lease term. The depreciation will be on the basis of useful life of that asset, right? This is what I told you in case of subsequent measurement of the ROU asset, right? This is what I told you guys. Janvi, is that clear? Is that clear, guys? In case of operating lease, lessor will show the asset in its books of accounts. In case of finance lease, the lessor will de-recognize the asset and recognize the financial asset, which is finance lease receivable account. Okay. At the time of initial recognition, if it is a finance lease, the accounting entry is finance lease receivable account debit to underlying assets. For example, it was building. Finance lease receivable account debit to building account. So PP has to be de-recognized and the lease asset, which is finance lease receivable is going to be recognized. Now the lease receivable is going to be recognized with what value? The lease receivable is going to be recognized on the basis of the present value of the lease payments, present value of the lease payments. What is meant by net investment? Net investment means, what is meant by net investment? Net investment means your present value of future lease payments. Present value of future lease payment is your net investment in the lease, right? So friends, for example, the finance lease receivable comes out at 800 rupees, but your property, plant and equipment, your de-recognized as 1000 rupees. So 200 rupees will go to the P&L. It will go to the P&L. It will go to the P&L. In case of operating lease, any initial direct cost is added to the carrying amount of the underlying asset and amortized over the lease term on the same basis as lease income. In case of operating lease, there is no accounting. Why? Because the asset is already in the books of the lessor. Subsequently, the lessor will depreciate the asset over the useful life of the asset. Lessor will also check the impairment assessment and lessor will recognize the lease income. If lessor has spent some initial direct cost, right, it has to be added to the carrying amount of the underlying asset. Initial direct cost when? At the time of procuring the asset, right? At the time of procuring the asset. Subsequent remeasurement, finance lease receivable will be increased by interest income in the P&L at the rate. It is just reverse accounting. You remember in lessee accounting, we have done the finance lease obligation accounting. Lease liability means finance lease obligation. So what we were doing, we have computed the present value of the future lease payment as a lease liability. Vice versa, the lessor has to recognize present value of the future lease payment means receivable as a finance lease receivable, as a lease receivable. Instead of lease liability, it is lease receivable. The lease liability was increased by interest expense. The lease receivable will be increased by interest income. The lease liability was reduced by payment of the rent installments. The lease receivable will be reduced by recovery of the rent installment, right? Decreased by receipt of actual lease payment, increased by interest income, which will go to the P&L at the same rate which is used for discounting. In case of operating lease, lease income will be recorded in P&L on a straight line method or another systematic basis. A straight line method means total lease payment divided by the lease term, right? Is that clear? Guys, let me show you the lease accounting in case of lessor with the help of this Excel file. I hope this Excel file is visible. Lessor accounting, right? Lessor accounting. A Limited is the lessor who leases the building, B Limited a period of years. Years. The lease rental is 10,000 per annum, and to be increased by 10% every year, right? Every year. Life of the building is 20 years and value of the building and cost of the building is 20 years. And the cost of the building is 20 lakhs. So what is the classification and accounting in case of lessor? Right? Friends, first of all, solution. If I consider this case, this is a classification is concerned This is a operating lease accounting. This is a operating lease accounting. As far as classification is concerned, this is a operating lease accounting. This is a operating lease accounting. Is that clear? Why? Because it is just 3 years, right? And the life is 20 years. It is not for the major part of the economic life. It is operating lease accounting. In that case, what lessor will do? Lessor has to recognize this lease asset, probably building. The building was there in the lessor books. Building. Probably when the lessor has purchased this building, it is recognized as PP, building PP account debit or investment property account debit to bank account, right? 20 lakhs. 20, 20. It is 20 lakhs, right? And every year, and what he will do, he will depreciate this also. So he'll recognize this asset and he'll depreciate this asset also. Depreciation, he'll charge depreciation. But he'll charge depreciation not like a lessee. The lessee will be there. Lessee will recognize the asset, right of use asset only for 3 years and depreciate over a period of 3 years. But this lessor will charge depreciation over a period of 20 years. Accounting entry will be depreciation account debit to building account or to accumulated depreciation account, whatever, right? Again, it is 20 lakhs divided by 20 years. Okay, 1 lakh will be your depreciation. Every year you need to charge this depreciation. Now, what about the rental income accounting? Rental income. First of all, friend, the standard says that you need to recognize the rental income on a straight line basis. In the year one, what is your rental in the year one? 10,000 rupees. In the year two, it will be increased by 10%. And in the year three, it will be increased by again 10%. It will be again increased by 10%. What is the total amount? The total amount is 33,100. Every year, rental has to be recorded in the books of accounts on a straight line basis. Means, what is a straight line basis? Means every year, this rental has to be recorded at 11,033 rupees. 11,033 rupees. Right? 11,033 rupees. And what is the accounting entry in the first year, in the year one, at the end of year one? At the end of year one. What lessor will do? Lessor will do bank account debit. Bank account debit. How much money he'll get? He'll get only 10,000, right? But he will recognize the rental income on a straight line basis to rental income in the P&L. By how much? By 11,033. It is credit. And the differential will be recorded as a lease equalization asset, right? Debit. And it is difference between 11,033 and 10,000. This is how it is, right? At the end of year two, what will happen at the end of year two? At the end of year two, same accounting entry. Same accounting entry at the end of year two. But the bank account will be debited by 11,000 in the year two. Your rental income will be credited by 11,033. And your lease equalization asset is 11,033 minus 11,000, only 33. At the end of year three, again, accounting entry will be the same. But the only thing is bank account will be debited by 12,100. Your lease income, rental income will be credited by 11,033. And in this case, your instead of debiting the lease equalization asset, the lease equalization asset will be credited. Instead of debit, it will be to lease equalization asset. This lease equalization asset will be credited in the last year. I hope it is clear to all of you how this accounting has to happen in the case of operating lease. I hope this is clear to all of you guys, how this accounting has to happen in case of operating lease. Yeah. Is that clear? How this accounting will be done? Is it clear in mind or clear from mind? What is that? Clear in mind or clear from mind? It is the same accounting which we were doing earlier in AS 19 also. It is the same accounting. I hope this entire operating lease accounting in the books of the lessor is clear. It is the same accounting which we are doing. Lessor has to recognize rental income on a straight line basis. Straight line basis means over the non-cancelable period, whatever the total rental payment is there, it has to be divided by the lease period, and the difference has to be recognized as a lease equalization asset. Right, guys? I'm waiting for the response. I hope I am audible to everyone. Ashok ji, am I audible? Janvi, is that okay? Have you understood? Thanks, Radhika. Thanks for the confirmation. Okay, so great. So guys, we have covered the operating lease accounting in the books of the lessor. We have covered that operating lease accounting, very simple accounting. Lessor has already recognized the asset. He will depreciate the asset as per the PPE standard in Ind AS 16 or investment property standard in Ind AS 40. And whatever income he will earn, so he will recognize that income in the P&L whenever he'll earn that income. The only thing is he will recognize that income on a straight line basis, right? So friends, on the Saturday in the last class, we will be covering the finance lease accounting in the books of the lessor, right? So we will be covering three concepts: finance lease accounting in the books of the lessor, accounting in case of a sublease, and sale and leaseback transaction. These three things we will be covering on Saturday, right? Thank you so much, friends. And I'm concluding my session now. If you have any queries, I will be happy to discuss, right? Otherwise, I will be concluding this session in the next 30 seconds. I hope you guys have understood the concept of the modification, understand the concept of allocation of consideration into a lease component and a non-lease component, and the modification accounting, right? What is a modification accounting, when it will be considered as a separate lease, when it will not be considered as a separate lease, and the finance lease accounting, that what is the classification of finance lease accounting, what is the classification of lease accounting in books of lessor, and the lessor accounting, which is a operating lease accounting and finance lease accounting. And how this operating lease accounting is happening in the books of lessor, I have explained you. I will be explaining the finance lease accounting in the books of the lessor, and sale and leaseback transaction and sublease in the next class. Thank you so much, guys. Stay safe, stay happy. I believe that you guys have found this session useful as well. Bye bye. Take care.